Good morning, Wall Street winners. It is August the 24th. And as we get close to the end of summer, the end of August, and are entering the September timeframe, I am becoming increasingly nervous about a larger correction and pullback. If we look back in history, we've seen some of the biggest pullbacks in the stock market in the September through to end of October timeframe. And I have a feeling that we're likely to see something like that again as tariff costs start to kick in and we start to see the increase in inflation and cost of goods, the US consumer being very cautious about how they're spending these days and where they're directing their money in terms of where the spending goes to which retailers and which types of goods, avoiding large purchases, homes and automobiles. I think we're going to see an economic downturn in the US coming this fall that will be of a magnitude that we have not seen in quite some time. Now, I'm not hoping for that, but I'm feeling like the data is pointing in that direction. What could worsen that is we saw how optimistic the markets were on Friday of this week with the dovish tones coming out of US Federal Reserve Chairman Jerome Powell. And if we do start to see some tightening in the economy, we could actually see an interest rate increase in the fall. And that would shatter markets and cause a fairly aggressive pullback, in my opinion. So be extremely cautious going into the fall. If you have done well in the markets up to this point and your percentage returns are at or above what you'd hope to accomplish for the year, then as I have, will be taking a much higher cash position in money market funds that pay interest as opposed to holding equities long term going into this fall season. All the best in your trades this week. And if you like the videos, please hit the like and